Good day, fellow investors. Very important question when it comes to investing, but not discussed that often, is how much cash should one have available always on his account to buy investment opportunities, to be greedy when others are fearful. And in that line, I really wanted to summarize all of your comments, the most common questions, and discuss that in a 10 video series, discuss all the concepts that are really important but often not discussed and not enough discussed. So please, if you like this, smash that like button and consider subscribing and click that notification bell to be notified when a video of this series comes out. And in this video, I really want to discuss how much cash to hold. There has been a great comment by Spiral Ganglion. So how much cash should one hold? Berkshire has 150 billion of cash on the balance sheet, and does it make sense to be mostly fully invested, or it's better to wait for a market crash? Waiting for a market crash, that will be again a topic for another video, but let's discuss now the cash. If we look at Berkshire Hathaway's balance sheet, yes, there is 140 billion of cash on it, and Warren Buffett says 70 billion is for insurance requirements and 70 billion is for big purchases. Unfortunately, there is so much money in the system that Buffett cannot find the big purchase that he likes. So that's Buffett. He's different than you, but you don't have to take out elephants there in the market. You can buy value even if it is small, if it is global. So the answer to the cash question, you can have different perspectives in life and you have to find what best fits you. If we go to Peter Lynch, whoa, this is heavy. If we go to Peter Lynch, he has solved that issue very easily. He has said, okay, I'm going to be invested 100% all of the time in the best businesses I can find with the money his clients allocated to investing. You can find the summary of this book in my free stock market investing course in the link in the description below. And that's about it for Peter Lynch. If I take as an example my comparative stock market table here, then you can see, okay, a lot of companies we have analyzed. This is the publicly analyzed stocks. You can find the premium on my stock market research platform. But you can here compare, for example, I don't know, Verizon. We have made a dividend analysis, and then you can see, okay, how does this dividend fit my financial goals? And if you're happy with the valuation, with the returns for Verizon, then you buy it. And the question is, if you don't find anything that you are happy with, then you don't buy it. But having cash, it's not really rational, because it is more about sometimes you win, sometimes you lose. Let's say that you said, okay, I'm going always to have 20% of cash in my portfolio, and let's say you started invested in 2010. And if you started here and always had 20% of cash in your portfolio waiting for those dips, you would never have invested, or you would have invested here, but you then already missed these dips. So nobody can time markets, and we made a video about timing the market, and therefore if you find value, if you find something you like to invest in, then you invest. If you don't find value, as we have seen here, if we look at the ratios, a lot of these things is overvalued from a 10% investing return expectations. If you don't find value, then the second strategy is to have, of course, cash on the side, and then you have to see, okay, how am I going to balance there? You might check other investments. Then investing is also about life, which is also a topic that we are going to discuss here. So my message is focus on value, not on cash. If you find something that at this moment in time will lead you to your financial goals, focus on your financial goals, on value, not on I have to have 10-20% of cash, because then you start focusing on the stock price movements, and that's a loser's game. Focus on value. Okay, do I like this? Does it lead to my financial goals? If yes, then forget about the cash. Of course, this doesn't include the 6 months, 12 months, 24 months safety cash living expenses. We are here talking just about stock prices, and when it comes to stock market portfolio, so it's already money you will never need again, so it's just the cherry on the cake in your financial life, then it is not rational to hold cash just to hold cash, especially as the value of the cash there is a certain no-go. It's certainly that money will lose value, and we have seen with raising inflation rates. So when you find something you buy it. I am most of the time fully invested. Only if I sell something until I find something new, I might have some cash. But if I find something I like with my stock market money, I buy that. If you have, and we all have life on the side, that's something you have to see how it fits for yourself. So buy value when you find it. Think about the value of the cash. Yes, opportunities can come, but we'll discuss that in the Waiting for a Crash video next, and you'll see again the irrationality or rationality of that. And then another concept about the cash is if you're fully invested, then you start really thinking about value. Then at some point you might sell something overvalued and buy something that is more undervalued in the portfolio. And this triggers and develops the concept of value when it comes to investing, and not stock prices and not cash. Thanks for watching. Subscribe. This is a big series that I'm making. I hope you enjoy it, and I'll see you in the next video.